Hey traders, today we're exploring one of the key principles in price action and SMC trading, the break of structure, commonly known as BoS. This is your initial hint that the market is shifting from its previous behavior. A change in direction is unfolding. When interpreted correctly, it can act as your early entry signal into significant trend movements. So, what exactly is BoS? Let's break it down. BoS means the current market structure has been disrupted. Simple as that. If the price was forming higher highs and higher lows, an uptrend, and suddenly breaks a previous low, that signals a bearish BoS. On the flip side, if the market was in a downtrend creating lower highs and lower lows, and then it breaks a prior high, that's a bullish BoS. If that sounds like your thing, don't forget to tap the like button to support the content and subscribe if you're joining us for the first time. We'll catch you right after the intro and the disclaimer. In short, a bearish BoS is when a higher low gets taken out. A bullish BoS is when a lower high is broken. This indicates the market could be finished with its previous direction. Structure blocks. Before identifying a BoS, you must understand what market structure looks like. In an uptrend, price forms a sequence of higher highs and higher lows. Higher high, higher low, higher high, higher low. In a downtrend, price moves through lower lows and lower highs, lower low, lower high, lower low, lower high. BoS doesn't occur out of nowhere. It takes place when that structure collapses. Picture BoS as smashing through a defensive wall. Once that wall gives way, the trend has room to reverse. BoS versus CHOCH. What's the distinction? A lot of traders mix up BoS with CHOCH, change of character. Here's how to keep it straight for good. Checkmark BoS confirms that the trend is continuing. Checkmark CHOCH signals the start of a reversal. Let's take an example. Imagine you're in a downtrend. Price breaks a lower high. That's a CHOCH, the first clue of a possible reversal. Then, price breaks the next key structure. That's your BoS. Now, the trend is clearly shifting. BoS follows CHOCH when a reversal is happening. But during a trend continuation, you'll only see BoS without a CHOCH. Bearish BoS example. Let's walk through a bearish setup. The market is trending upward, higher high, higher low, higher high. Suddenly, the price breaks that higher low. That signals a bearish BoS. Why does this matter? It shows that buyers are losing strength and sellers are stepping in. The uptrend could be ending. At this point, you start scanning for entries in premium zones. Look for order blocks above, watch for a liquidity sweep, and wait for confirmation. Now let's flip it. Bullish BoS. Example. Now let's reverse the setup. The market is moving downward, lower low, lower high, lower low. Then, price breaks the most recent lower high. That signals a bullish BoS. This shows that sellers are losing momentum and buyers could take control. The downtrend may be wrapping up. So, what's next? Wait for a pullback into a discount zone. Look for a bullish order block or FVG that aligns with your higher time frame bias. Multiple BoS in trends. Trends aren't formed by just one BoS. They're constructed through a series of BoS, each one confirming ongoing continuation. In a strong trend, you'll notice a pattern: BoS, pullback, BoS, pullback. Each BoS signals that the structure remains solid and the trend is still active. Use that as your cue to re-enter with conviction. Think of it this way: each BoS is like another step in the market staircase. BoS and market structure go hand in hand. BoS is the core of understanding structure. Once you grasp BoS, you'll be able to identify reversals, ride trend continuations, and avoid trading against momentum. Structure is simply a pattern of impulse and pullback. A BoS disrupts that pattern and reveals a shift in direction. Blend this with liquidity zones, fair value gaps, and order blocks, and you've got a powerful entry strategy. BoS entry setup. Let's put together a complete entry plan using BoS. First, watch for a CHOCH as your early reversal signal. Then, confirm it with a BoS, the break of structure. Next, identify your order block or fair value gap zone. Wait for price to revisit that zone. Look for confirmation, such as a market structure shift or a liquidity sweep. Now you're not guessing, you're trading with structure. Timeframes for BoS. BoS plays out across all timeframes. But smart traders do this. Use higher time frame, HTF, like 1D or 4H to define trend. Use lower time frame, LTF, like 15M or 5M for precision entries. This helps avoid fake outs and sets you up with cleaner structure and better risk reward. BoS on higher time frames equals bigger market moves. BoS on lower time frames equals sniper level entries. That's the BoS mindset. Just remember, BoS isn't a magic trick. It's a strategic tool. You need the patience to wait for it, the discipline to avoid chasing false breaks, and the clarity to pair it with solid confluences. BoS gives you the blueprint. Your job is to interpret it wisely. Don't overthink it. Just ask yourself, is the structure intact, or has it been broken? To recap, BoS equals structure has shifted. To sum it up, BoS means a structure has been broken. It's your signal for either trend continuation or confirmation. Pair it with order blocks, FVGs, and liquidity zones to get precise entries. Always align with higher time frame structure. When you combine BoS with CHOCH, your entry setups become next level. Thanks for tuning in. I hope you found value in today's video. If you did, go ahead and hit that like button to show your support. It really helps us out. And if you're new to the channel, consider subscribing so you don't miss future content. Thanks for watching, and I'll see you in the next episode.